All right, everybody. We are live on Market Recap with Chris and Amit. Chris is not here. He's running a little late, but we do have our special guest for today who was so kind enough to join us. And that special guest is Tanner. Welcome to Late Night Stock Talks.
Check me out down below, okay?
It's Chris Mateo, right? Yeah, I thought all three of us were going to be here, so I'm like, oh, the banner is definitely not going to work, but Chris is not here, so we're here. So we're going to get into a lot of stuff today. We have Tanner for about an hour, but we were just talking offline about finance YouTubers, and I want to start the conversation there until Chris comes. Tanner, who's the this motherfucker comes in right now. Fuck this guy. All right, so I'm going to ask you the question, and then he'll come. Who is your favorite finance YouTuber, and can you explain why?
So I grew up on YouTube. Like I grew up watching Graham Stephan, Andre Jick, Meet Kevin. Jeremy Lefebvre was, probably one of the first guys that I got into.
I add him, and
Jesus Christ,
you're back in the background, Chris. Fix your fucking mic. All right, go ahead, continue.
Yeah, he's blending something. No, we were talking, behind the stage. I think because all these guys are getting sued now, so it's crazy that this is happening. But what are you doing? Okay. I was just going to say that, Meet Kevin, I'm a massive fan of his, and I know that he pushes products and all these things, and people get very mad at him for doing these sort of things. But it's a lot of these products that you don't necessarily need to take. And if you just watch the information for, let's say, updating you on what the newest trends are, or not even trends, but what the news is and these sorts of things, there's nobody that pushes out content nearly as fast as he does. And yeah, I'm just a massive fan of Meet Kevin and what he does. And it's partially the reason why I even started a YouTube channel in the first place. So maybe I'd love to hear, Chris's thoughts on,
but this segues into the conversation. Chris, we were having a conversation, and you can unmute yourself, is about this FTX lawsuit. What are your thoughts on YouTubers being sued about it?
So I think some of them definitely deserve to be sued. I'll be straight, but some of them are, not really the case.
Your mic's a little hot, Chris. Just gotta reduce the gain just a little bit.
Yeah. Just turn that down. How's it now?
Yeah, you're good.
I'd say Erica Kohlberg definitely needs to get sued because she owns the company that no, it's the truth, because the company is the one that promoted a lot of this stuff, right? The individuals are fine. Like, you shouldn't go after the individual, go after the company that was profiting off of this. So if you look at it, the company that Erica Kohlberg has is the one that really primarily
that creators agency thing.
Yeah, so that's the company that should probably get sued and get sued into bankruptcy, because they're probably more responsible than anyone else. The individuals, on the other hand, not so much, because that's how it usually works, right? The individual is just following the orders of the company that they're affiliated with. So I say the company takes the profits and takes the losses.
Yeah, I would tend to agree. I mean, first of all, if you look at the lawsuit, it's an absolute nothing burger, in my opinion. They're not getting $1 billion. I mean, that's just ridiculous. It's going to be bad PR for some of those names, but the lawsuit is probably not that big of a deal. Tanner, how do you feel about Meet Kevin being sued, given you're such a big fan of him?
So here's the thing, is that I wonder, because even now, like, we're kind of in the creator space as well. How much due diligence could Meet Kevin have done? Right. Yeah. So if he reads the terms of service and he does all these things and it says your money is safe. All right. This is exactly what we're going to do. And then also relying on the regulators as well. So this is Meet Kevin put out a video today talking about it, saying, you know what, there's the builders of the houses, and then there's the people that inspect the homes, and then there's the real estate agent, and then there's him, right? Promoting the real estate agent that is going to actually try to get you into that house. How far back does the actual, I guess,
web
liability actually go? And in my case, or in the way I see it, is that if Meet Kevin had done his due diligence, which is to read the terms of service of what is actually happening with their money, there's nothing past that he could do. Like, he can't go to FTX and be like, show me what is on the systems. That doesn't happen anywhere. Yeah. So I never quite understood how CoffeeZilla and these sort of people made these videos, because the due diligence was done. It was just a simple, straightforward fraud.
Yeah, I would agree. Ultimately, I mean, look, if Sequoia, Bank, BlackRock, Tom Brady, Steph Curry, they can get fooled, then obviously some YouTubers can get sued as well. Chris, you're muted.
There's money in suing also.
That's true. Yeah.
one, the lawyers that make money by providing the hours of work that has to happen. I mean, this is a class action, which means there's a lot of money to be made on the lawyer side of things. So that's number one. Number two is the goal isn't to win a lawsuit, it's to get enough of a settlement where it pays all your law firm's bills. That's what happens. 95% of the time, I don't think the actual people, the plaintiffs ever really see that much of the money. Most of it gets eaten away by lawyers. Like I've been on the other side of like lawyer stuff, and I've seen the amount of billing that has to happen in order for a lawsuit to go through. So even a year, 2 years of fighting this, they'll bleed the money out of these guys. And what I mean by out of these guys is not them directly, but probably the insurance company, which just backs these guys. Because that's what you need when you're this big of a creator. You need to have insurance that protects you against liabilities of getting sued. Otherwise, what's going to happen is you're going to be fighting off lawsuits. Like eventually, Amit, you, me, Tanner, we're all creators, and we will get to a point where we're going to need insurance because
Yeah,
we could
100%.
say something, and someone else could take it out of context, and they could just sue us, thinking that, hey, I'm going to sue this guy. Like right now, if you sue me, you're not going to get jack squat because I'm not like Kevin Paffrath status. At the most you'll get out of me is a few $1,000s. Most of the time I'll just show up in court and be like, Your Honor, I didn't do shit. That's it. But meet Kevin and all these other people, remember their time is way more valuable. So just to not have to fight it, they'll have to hire lawyers just to defend themselves in court. And most of the time the other side says, hey, just give me some money as a settlement. And it's probably cheaper to just settle than it is to actually fight the court case. So, and unfortunately, this is part of our legal system. Like one of my brother-in-law, he fights this all the time where you have people who are legitimately handicapped, right? But what they do is they go to all these stores and these businesses around like Atlanta and all the area. And what they do is they'll go and say, oh, I'm disabled, but you didn't have a wheelchair ramp or that meets the specifications that are required. So I'm suing you under the American Disabilities Act. And now the business has to make the changes, but in the meantime has to try to fight off this law. So and what happens is they open like 100, 200, 300 different businesses. Most businesses, because they don't want to deal with the insurance increase, because the minute you get sued, your insurance also goes up. They're just like, okay, look, we'll settle this out of court. We'll make the changes and we'll move on. So literally you've got these parasitic lawyers using disabled people to make changes in certain businesses and all this other stuff. Now, the intention is good, but these guys are using it to make a buck, which is really sad. But this is just how the world works,
Chris, you figured out how to flip your camera?
Yeah, actually, instead of using my camera's direct HDMI link, I just used the Elgato. So
Gotcha.
yeah, so now the Elgato, I can flip it on there. So now I can flip it to the other side. So
Gotcha.
Yep.
All right. Well, we've got Tanner here, resident SoFi expert, fintech expert. Do we want to talk some banks? What's going on with FRC and some of the core issues? Tanner, go ahead.
What do you guys think? Do you think they're gonna, find a buyer? I think I was reading today that potentially, JP Morgan, B of A, Goldman Sachs, they're all gonna jump in and potentially, try to support First Republic. But I didn't see anything too much past that. I was actually quite busy today. But I'm curious what your guys' thoughts are.
What were you doing today that made you so busy? Aren't you on vacation?
No, I've got an actual job. Not financial advice. Yeah, I'm sitting poolside, trying to sell insurance and manage some money. But I've been relaxing and working at the same time. I'm fully working from home anyway. So
no?
I was gonna say, what kind of insurance you selling, bro?
Cool insurance.
I sell life insurance. Bunch of stuff. Anyway,
Chris, is FRC getting bought out?
No, it's not. I can tell you a couple of things. You know what? I take that back. I actually take it back. Likelihood is no, but you never know with times like this. If you guys remember what happened with Lehman Brothers, when Bear Stearns got acquired, Lehman Brothers was the next one that was teetering on the brink. Remember when the Fed called these guys in, called all the banks, said, look, this is your problem. You need to fix it. Otherwise, this is going to be a contagion. And then the next one's going to pop, and then the next one's going to go on. So it was a domino effect of confidence that they're trying to arrest right now. So a lot of these banks, they got together and said, look, if we got to throw in a few $billions right now to just secure First Republic, that's fine. We're willing to do that, because if First Republic goes down, the next one is a bigger bank, right? Some people were saying Bank of America, because Bank of America had a lot of hold to maturity assets on its books too. Now, yes, we could say First Republic is not really a big deal because, they're not a systemic bank, but Bank of America is. Like, you've got Audia's money is with Bank of America. Imagine Bank of America
is FDIC insured because we don't have more than 250K there. So
yeah.
But no, okay. But nonetheless,
good point. But I'm saying there's a lot of businesses, small mom and pop businesses, that keep their money with these bigger banks. So, in order to secure the economic system, they have to arrest this domino effect, like somehow. Now, the Fed pulling the trigger and actually giving them liquidity is one part of it, but that is a pill that taxpayers are not going to be on the hook for. So a lot of these other banks are saying, okay, look, as long as the Fed is willing to cover our losses, we'll throw the money in. So that's what they're doing essentially. They're taking some hits short term in profitability in order to make sure that they have long-term survival, because the last thing you want is a banking crisis where people are losing confidence in their banks and they're starting to have bank runs on your bank.
Isn't this a good thing for capitalism, where the banks are realizing like they don't want the government to kind of step in, or they don't want taxpayers to be held accountable, or so, and they don't want any type of crisis, so they're doing something with their private money before a contagion happens?
No, they want that. They love every one of these guys is a capitalist until something goes wrong, and then they all become socialists, right? That's just how things work.
Like, yeah, but they're using their bank's money to help FRC not collapse.
Yeah, but they're doing it in a very short-term way, but they've probably got some backing from the Fed saying, look, we will put money in, but make sure you guarantee that we don't take losses, or significant losses. Otherwise, they wouldn't do it. Like, we don't know what the negotiations are in the background happening, like with regards to the Federal Reserve. But I can tell you the Fed has definitely keyed them in on certain things. And a lot of times it's also threats too. Like last time during Lehman, I don't know if you guys know this, but they brought in Sheila Bair from the FDIC and said, look, if you don't play the ball with us, like if you don't commit to helping, we are going to go through your books, and I guarantee you're not going to be as secure as you think you are. So even from like a regulatory standpoint, the government has the ability to threaten you into action. So they can say, look, either you help us, or we're going to work on creating some sort of legislation that's going to mess your profit margins to the point where this little bit of money that you're throwing in will seem like pennies compared to the amount of money that's going to cost you and to basically regulate the shit out of you. So
Tanner, you think they're getting bought out?
Well, okay. So I think what's funny is that these banks, the larger banks, really have time on their side, right? So this is sort of what I think is what happened with Bear Stearns, is that they just simply waited and things got worse and worse. And then, JP Morgan stepped in and goes, okay, we'll buy it for $2 a share, right? Which I think I read today was 1% of what their market cap was the year prior, which is just absolutely insane. What I don't necessarily agree with is that they're not trying to protect depositors. I don't believe that. I don't think that this is, trying to protect panic or anything like this. I don't think any bank would step in to do that. What I do think is that, like Chris said, that this is shareholders behind the scenes making deals, and we don't know exactly what deals they are, but they're just making sure that the large shareholders are protected. Because if they are to go under, and they are to step in, and maybe the bank term funding program is not large enough to actually support them, that potentially, they want to get some return on their money, aside from what happened with Silicon Valley Bank, where they got nothing, and management and all shareholders, debt holders, all got wiped out. So I think this is shareholders trying to protect their money. The depositors are, I personally don't think that they're a concern to the banks at all.
So Futtbucker says stress tests are BS. The
Wait,
argument,
hold on.
yeah.
That's just, you just have to acknowledge how stupid. Okay, go.
Dude, I love Futtbucker. I talk to him privately on Discord from time to time. The guy is smart. Don't
No,
get,
he's super
yeah,
smart. I just love that we
yeah,
have to say his
yeah.
name like this. So Futtbucker said it's like
So Futtbucker says stress tests are BS. Argument banks are better capitalized than ever before. It's nonsense. I agree. Totally agree with you, Futtbucker. That's why I'm saying that there are other tools that might be being used in the background. An example is stricter legislation on how they can invest their money, right? Those are the kinds of things that the Fed is probably threatening them with. I'm just giving you as an example. In 2008, they weren't as capitalized, so it was a different story back then. So there was a threat that could have been used in 2008. That's not the case this time. There could be other threats that the Fed can make. I'm just saying the government has the ability to threaten you. Like, that's just how legislation works. So sometimes if you need companies to act in a certain way, you can threaten them with stuff, whether it be regulate. Most of the time it's through regulatory actions. So yeah.
So I think that the moves made back in 2008 with, having to hold much more capital, before I think it was 2%. Now I think it's somewhere along the lines of at least 6% in terms of a CET1 ratio. And depending on the types of assets that you hold, it can even, the minimum can go, the highest I've ever seen is 11%. But so the idea being is that the higher that ratio is that you have to actually hold capital, as reserves, is that's less that you can actually lend out, and that your growth rates are actually going to be slower. Is that better for the banking system? Yes, but that does impact growth. So I would say that I wonder what the actual difference. I was reading some articles talking about how there could be, a total of like real basis point differences in terms of GDP just for the banking system on the regulation that changed back in 2008. If there's new regulation that's stepping forward, this is what Kevin O'Leary is talking about. I just made a video on this talking about how much more, regulation can you put on banks before you realize that these are just not stocks that you want to touch. You know what I mean? Because it could really impact growth. It would be very safe, but is that really what you want? I mean, there's safer options in terms of stocks out there.
Yeah, that's fair. And speaking of bank stocks, this is not SoFi Weekly, but the 136 people that are here have it's important to understand that Anthony Noto just bought another 45,000 shares today. Chris, your bear thesis on this seems to keep getting crushed every time Noto decides that the business is doing well, reasonably enough for him to keep putting hundreds of thousands of dollars of his own money.
It's his favorite part of the company.
It's his favorite part of the company. It kind of seems like the guy is seeing some deposits potentially roll in, and he's like, holy crap, this earnings might be really good, and I should buy up some more stock. What are your thoughts on that, Chris?
First of all, I'm not a SoFi bear. I'm just concerned with some of the business practices that they have, in which case, what kind of effect is it going to have on their business model, right? I told you, SoFi is a very well-run company from what I can tell. The problem is some of the decisions that they've had to make as a business have gone outside of what they normally would have done. So an example is this student loans. That's where their bread and butter was before. And then they had to shift into personal loans because student loans ended up getting like memorialized. What's the thing? Legislatively crushed. That's why, like right now, SoFi is suing them to say, look, we want to get back into the business that was our core function, so that this way we can help people who are loaded up with student debt get out of debt, right? So you have almost like a system that is almost like perversely messing with you and making you take more risks. Now, can Anthony Noto navigate SoFi and make sure that things, work perfectly, and on the other side of this end up benefiting significantly? I think so. Like, some of the actions that they're taking are amazing. Like, here's an example: the ability to lend shares. Like, that was great. That's a perfect way to make money. So like right now, let's say I want to short a company and I want to borrow those shares. Well, guess what? I can, like right now, SoFi, I can go to SoFi and say, hey, lend me 100,000 shares of X, Y, and Z, and I'll pay you a certain amount of interest. Some of that interest is definitely going to go to the shareholder itself, but some of it's also going into the pocketbooks of SoFi. See, these are creative ways to generate money that some other people may not necessarily know. And the what I like about it is that they're moving very fast. Like, to do these kinds of things is not.
Yeah. Noto's buying stock. So what's the issue?
So I think you're looking at the insider stock buying a little too like confirmation bias that everything is swell. Like, oh my God, if insiders are buying, that means the company's doing really well too. Like that is a good argument because that does give you shareholder alignment. But even among shareholder alignment, there's things to say that macroeconomically, if things go sour, no matter how many shares the CEO owns, it's not going to help your business.
Yeah, but
right?
that's every
But yeah, but
company. Like,
Yeah.
right?
No, and I agree with you, but that's what I'm trying to say. That's the point that everyone should understand, that some things, even with a great management, great business, you're not in control of the economy, right? And you have to be able to navigate these waves as they come, because that's exactly what's going on with SoFi. SoFi right now is on a ship, and there's giant waves just hitting it. Now, Anthony Noto's the captain of this ship, and he's navigating it pretty well from what I can tell, right? The question is, does he have that ability to do it for the next however many years to see them to the other side? And I think he does. I really do. But I'm worried about these waves because SoFi is still a very small company. When you have like a giant company, a big one, they can weather storms much easier than smaller companies. So all I'm saying right now is I would be cautious on SoFi. I'm not a bear on SoFi. I know a lot of people think that I'm the resident bear on SoFi. No, I'm one of those people that add some contrast to the endless bullishness that some people present. That's all.
Tanner,
So-
your thoughts?
Yeah, so I was just going to ask, like, a couple things. If we're going to stick on SoFi for a second, is Chris, and eventually, hopefully, we can get to this. Sorry about the dog. One, what do you think about SoFi actually going after, the Biden administration and saying that this is, the actual moratorium extension has gone on for too long? Okay, that's my first question. Secondly, what do you actually think? Sorry, I paused there for a second. I'm getting distracted. Why
What's
don't
the
you just
dog's
answer
name?
that, and then
You know the dog's name?
it's neighbor.
Oh, it's a neighbor. Okay, gotcha.
Go ahead and answer that first question while I just think. I just forgot what you had said just previously.
Chris, what do you think about them suing the Biden administration?
It's necessary. Like, sometimes you really need to step up. If no one steps up to the plate, then yeah, the things are going to fold very quickly, because that means that the government is going to have endless leeway in doing things their way, and that's it. And sometimes the government is wrong. Like, a lot of people don't want to accept that, but government is wrong. Believe it or not, in my opinion, government is wrong more times than it is right. And then until someone really steps to the plate and says, you know what, screw this, we're going to sue you, they don't even think that, that no one shines a light. I mean, no one shines a mirror in front of their face and
Do you
saying,
think the
look,
Supreme Court
you're messing
rules
things up.
for student loans or no?
I don't know. I don't know. The argument that's being made for debt forgiveness is very good from what I'm reading on like the media outlets, but I don't know if I trust a lot of the media outlets either, because the thing is, like, the Supreme Court is a much more closed door. The most we're going to get is the transcripts of the lawyers fighting. And every time I see anything coming up on like the news, it's saying that the people that are supporting the loan forgiveness are just absolutely killing it, versus the people that are trying to stop that from happening. Those people are on a different level. So I'm not sure. The other thing is, what SoFi is doing is politically kind of, what's the word? Like, it hurts them, right? There's like, I don't know if you guys know who Nina Turner is. She's a congresswoman from, I think, Ohio. She came out strongly saying, oh, you're just trying to make money, SoFi. Yeah, that's how capitalism works. Like, go live in Venezuela and see how socialism helped out that country. I think so many people, so many politicians, especially on the other side, they just think that magically the economy just works based on just, I don't know, pixie dust. They don't understand the ramifications of the actions that they take, and like the moral hazard that gets presented. So if you end up, I'm not saying it shouldn't help people out. You shouldn't, do some level of loan forgiveness, but you forgive these loans without putting in any legislation around how the next generation of borrowers are going to be controlled, whether it be through the university saying, look, you can't increase the what is that thing called? The tuition to so crazily every single time, and have the students constantly have to pay for it through loans. Like, they have to do something legislatively to stop this from becoming a problem again, because all they're doing is, oh, we're going to forgive student loans. Okay, that's great. you know there's a problem with student loans. And what are you doing to fix the underlying issue that caused people to take out student loans to the point where they are now debt slaves for the next 50, 60 years? You know.
So just going back more to the actual SoFi issue itself, I agree with you. I think that even though I guess I'm, a SoFi bull or whatever, that I'm very anti them, making this a public issue, right? SoFi is supposed to be getting your money right, not SoFi worrying about them getting their money right. Like, I think that's sort of a problem. And then taking it from the hands of the members that you're trying to serve just seems super weird. So I'm very anti that actual issue. So sorry. I don't know why this dog's freaking out.
Just okay. Do we want to transition to Nubank for a little bit? And one of you give me the bull case on why Nubank is a better buy than SoFi, if you had to argue that. Chris, you can start.
Can I share my screen really quick?
Or Tanner, yeah, go ahead. You got it. Yeah. So, by the way, thank you to everyone in the comments. 165 people here. Blake, Todd, Joseph, Baba, Michael, James, Reagan. If I ever get a dog, I'm going to call him Bubba. That's what I want to do if I get a dog. Freud in a slip. That's a great name. Futbucker, JS, Gabe. Thank you all for being here.
The other name,
let me know whenever you can see this.
That's hilarious. Lussy Picker. Did you see that?
Yeah. Lussy Picker is phenomenal. It's just great.
Okay. I hold both of these stocks. Big fan of them both. But this was one of my videos. I just thought I'd compare the two different things. Let me see if I can actually bring up a couple more points. Okay. One thing, and correct me when I'm wrong here, Chris, but the difference in SoFi versus Nubank is very, very compelling, or even just talking about Nubank themselves. One, here's the biggest complaint, and Chris, let's go back and forth on this, but that Nubank might already be so built out that their growth rates cannot continue. And maybe in the last couple of quarters that we've already seen this, that their growth rates in terms of their customers have slowed down, while they already have a relationship with 44% of the Brazilian population. If people don't know this company already, let me just explain a little bit. SoFi is kind of trying to do every single product here in the United States. Same thing down in Latin America. Nubank is trying to do everything, but obviously to the Latin American audience right now in Colombia, Brazil, and Mexico. And, whenever we're actually looking down at revenue per member or customer acquisition costs, they're looking at SoFi and they're saying, whatever you can do, we can do better. Right. So even with revenue per member, as what we're seeing in SoFi being in the low 90s, high 80s, Nubank in the same time period went from $8 up to $19.44, more than doubling how much they were making on a per member basis in a year and a half, right? Or a little bit more than a year and a half. Just the absolute growth in this company is unbelievable. And I've been wanting for a very long time to jump on and talk with Chris about Nubank and how we can sort of sell a bit on this company or some of your reasons for why you love this company as well. Because this is actually a company that we actually hold, together rather than, us kind of arguing back and forth about SoFi.
So I think the biggest bull case for me, outside of just the numbers, the first thing I always do is before I look at the numbers, I look at, okay, what are they trying to do? Are they trying to bring something new to the table? Are they trying to, compete with other things that are out there? And so the story is very compelling around Nubank because outside of so we in the US take our banking system for granted and how amazing everything is. Like we can pay our bills very easily through an online portal, an app, on your phone, all this other stuff. There's still a lot of countries out there that kind of setup is not really there yet, right? So there's a huge technology gap that exists between countries sometimes. So there are actual companies right now in the United States that have the ability to actually bring that technology down to another country and basically craft it so that the local population ends up benefiting from that. And because of that, people end up signing up and they can create business models around it. So Nubank's whole premise is the banking system in Latin America is, one, it's very risky. Two, it's really difficult to navigate. And three, it still runs on a very backward model of operating and it's usually, there are, I think maybe like 4 really large players in Latin America. I mean, in Brazil specifically. And the whole process on getting an account open, an account to borrow, and everything else, it was really restricted to like the very wealthy and like upper middle class of Brazil. And there was like a lot of lower end of the people that were not really, their needs weren't fulfilled. So Nubank said, look, we can fix that by introducing technology into the mix, where you don't need to have a bank branch in every city or every town. Like now you can do everything over the phone, over just a quick internet connection, right? So that's a value proposition for disruption of the big companies that are out there. The big companies out there also, the problem is they're so big that they got too comfortable. And because they got too comfortable, they left a wide opening for a new person to come in, Nubank, and basically take market share and actually grow themselves. So that's a really the fundamentals are horrible. Okay, that's great, Gabe. So that's
Gabe says the stock sucks. Why are you guys pumping it?
Yeah, we can talk about that at another time, Gabe. I'm sure that's
no, but you got to answer
You
that.
want to talk about it right now?
I'm sure that's why Warren Buffett and what is that, Sequoia and all the big name companies have really thrown money into it. That's great. Put that down, please. I'll discuss that in a little bit. The other thing is they have other areas of growth outside of just Brazil now. So they've got Colombia and they've got Mexico, and that's another really bullish thing for me because I was in Mexico less than a month ago. And I think a lot of times we don't necessarily see Mexico as like a first world country. We always like, oh, Mexico, they're like a third world country, poverty everywhere, etc. And I could tell you that's like the furthest thing from the truth, man. Like there are pockets of Mexico that are definitely like very impoverished, but Mexico for the most part is actually a very growing, developing economy that has a lot of room to expand. Right. And because of that expansion, Nubank being there that can disrupt the local players and take market share away can actually grow their revenues there. Imagine look at the amount of money that they're growing in terms of revenue per customer. And that's pure profit that they're getting out of it. Right. So the cost of acquisition is very low and the profit that they can generate per user is very high. So it's natural that's there. And then on top of it, they have a huge growth rate in the number of users. So there's a huge opportunity that is being capitalized by Nubank in South America that I think we'll see it become a really big player in the future. So that's the value proposition for Nubank outside of just the financials, which is great. You should always look at the financials, but the financials backed with the great story make this a compelling buy right now at a very early stage in its development. And they're very early, and they just IPO'd less than a couple of years ago. So
yeah, so I want to add to your experience in Mexico, because obviously I don't think it's a flourishing place. I think they have a GDP per capita of like 1/8 of what the United States is. So I wouldn't say that they're flourishing. I'm sure that you went to a very touristy area. You know what I mean? Like there still are very terrible places in which people are having hard times, getting through day to day. But that being said, even some of those people, like you pointed out, some of these people couldn't even make it to a bank each day to even think that that's where they wanted to store, any sort of capital or run with these banks. So the actual unbanked population in Latin America, especially the places that are serviced by Nubank, which right now, out of all the different countries that they can actually expand into, they've expanded into the 3 first countries that have the highest population. So that's pretty much why they're in Mexico, Brazil, and Colombia, right? Obviously, going down the line, they're going to be going into Argentina, Peru, Venezuela eventually, these sorts of places. And then we can even talk about like things people get very confused whenever they're talking about inflation and these sorts of things. They don't have to give out lending products, right? They can do other things other than give out lending products. So I definitely think people are really worried about this idea of risk for Nubank and saying how risky the average client is, as if they're not pricing for that risk, right? And the idea that there are so little players in Brazil, Colombia, and Mexico makes such a compelling story because they don't have to be so competitive with their margins. They still offer a lot of things like they don't have free commission trading whenever it comes to their invest products, and they don't even have, free overdraft protection or these sorts of things. They still charge for all that. And that's a big part of their growing average revenue per user is because there's really not very much competition out there to actually bring down those margins because they really are, the biggest player whenever it comes to neobanks. If I remember correctly, in terms of customer basis wise, I think they're the largest neobank in the world. So yeah, very interesting.
You guys make a compelling case.
There's one more thing I just want to discuss because it's actually being talked about in the comment section. It's around and something that you just said to Tanner, that Mexico is still a very poor country and all this. There's huge opportunities that Mexico is getting right now thanks to our anonymity with China. So I think where we look at, I had a lot of serious discussions with some people that I know, and also like one of my relatives that I actually like now technically he's relative because I met him through the wedding, and basically he owns a small defense contracting company in Texas. And one of the things he told me is that all of our supply chains are being something called nearshored, right? So what I expect to see in the next 5 to 10 years is a lot of our supply chains have literally been in China, right? And now the Chinese geopolitical risk is significant. So now the US says, okay, where can we build out a lot of our manufacturing capacity and base and make economic sense? Well, it makes sense in Mexico. That's why if you look at Tesla, they're building a factory in Mexico. They're not doing it out of the goodness of their heart. They're doing it because it makes sense from a value proposition. So I think the Mexican GDP will eventually improve to the point where it makes a lot of financial sense. And Nubank, being that they'll be in that market, will be able to benefit from that growth also. I highly, highly recommend people go to Mexico, check out Mexico. The other thing is, and this is someone made the comments like, oh, cartels, this. I don't know if you guys know this, the cartels are very much like the mafia in the 1920s and 1900, like early 19th century with us. Do you know how many companies and how many industries were built with mob money? Like all of Las Vegas was built with mafia money. All right. Criminal organizations have a history of building. What is the dream of every criminal? It's to go legit because they don't want to wake up in the morning like knowing that they're going to be threatened and everything else. So even the cartels in Mexico understand that economic growth and economic development come way before personal benefit and all this other stuff. So I would say this to you guys: Mexico is a place rife with opportunity. I think a lot of companies that are moving to Mexico, they're making really smart moves, smart decisions. The government is very supportive. Even the cartels are like, look, some areas are no-go. Like we are not going to do certain things. So yeah, mob built Chicago and Vegas. There's a lot of places that the mob built, and there's still mafia money everywhere. Yeah.
Can we show a couple more numbers? Because there's something that happened this quarter for Nubank that was very interesting compared to the other quarters in Nubank, right? So similarly, we have to understand sort of, how these banks work, right? Just fundamentally. Banks try to bring in deposits. Deposits help lower the cost for lending. Lending brings in the big bucks, okay? Very simply, obviously, you can make a lot of money through interchange fees and all sorts of things. Okay. But I would like to show off this page here because something very different has changed in Nubank recently.
While you're doing that, shout out to CodeStrap. He said he's just tuning in. He
page.
drove through Mexico for 6 months on his way to Costa Rica. People helped me so much, and the surf was insane. That's awesome.
Dude, Mexico is a beautiful country. I plan on retiring in Mexico.
And when's that going to be? Soon or?
Well, I mean, depends, bro. Not any.
Depends on if Meta goes to 300, then this man's fucking absolutely retiring. So
yeah.
So deposits here are growing steadily as the bank continues to find new customers. But this is unbelievable. Okay, so the actual cost of funding, which is the line that's actually going through these bars here, where before, and this is so cost of funding compared to CDI, which is practically the way you should look at it is the interbank change or interbank rates for how the Brazilian banks actually pay each other. So that's the rate at which they're going at is CDI, and they're comparing against that. So they were 98% of CDI, 98%, and then they introduced a new thing where they were actually going to stop paying interest rates for the first 30 days that people actually move their money into these accounts called money boxes. In the first quarter that they actually started doing that, it brought it down to 95%. But once it was actually starting to get fully used, that rate went from 95% to 78%. That is such a massive improvement in the amount of money that they get to keep for themselves. And you can see it whenever you look at, and there's just so many things I want to show off here, but where is it? Let me just go to, also, let me just quickly stop here. Activity rates. If anyone, loves a product, Amit, you're a very product driven person. Okay. Whenever you see activity rates that people are continuously using this product more and more and more, obviously that's very, hopefully interesting to you as it is to me. But I'm just looking for a rate here. Okay. Boom. This is their adjusted net income, and you can actually look at their annual adjusted return on equity or annual adjusted return on tangible equity, where these rates are just so off the charts, 58%, 40%. And not only this, they said that, this is obviously an outlying quarter, but they expect to hold up these numbers through all of 2023. So absolutely, this is a bank stock, but an absolute growth stock. And yes, you're paying a high multiple for that. But, Chris being into, Snowflake and all of these companies, he's not too worried about the actual, the valuations anymore. I don't even think he looks at that chart anyway.
I do. I look at the quarterly stuff on it, but there's a bucket in my portfolio that's specifically built for high performing growth companies that are way out there. So I do think from a valuation standpoint, it can look a little bit excessive, but the opportunity that you wait around for it to come down to a valuation that's attractive sometimes may never get there. Like I know so many people that were like, oh yeah, I'm going to buy Amazon once it gets to this price because that's what their valuation should be. And they never bought Amazon. And then they ended up just, regretting it. So don't always just rely completely on, oh, this is the PE that I'm going to buy a company at. And if the company doesn't have this PE, I can never invest in it. No, just, there are times where you have to, suck it up and just buy it. But I'm not saying, but these are the companies that you don't want to go all in on. Don't be like, oh my God, Nubank is the next big thing. Go all in. And then 5 years later, you're not looking at any growth whatsoever because you bought it at an overly inflated price. These are companies that when they're on sale, you can add materially. And when they're not on sale, you can add a little bit here and there. I think Nubank's growth stories is going to be much longer than people are expecting. So this is not in my wheelhouse of I'm going to get rich in the next couple of years. This is not a deep value play either. This is pure growth,
Tanner, go ahead.
I was just going to say, so whenever you actually look at, and I hate to default to, Warren Buffett buying this stock, obviously. But, being a value investor, and obviously this wasn't his purchase. I'm sure this is one of his guys that can, monitor a couple $1 billion. But looking at even the size of the amount that he had purchased, which is, quite a lot, and then the amount of, when he actually purchased it. So this was back, I think, right before IPO. I think they bought it on private markets, or right before or during the IPO, when the price of the stock was more than double what it is today. Does that not play a role to you whenever you think of valuation? And that was, when was that? 6 months into 2021. So, the absolute customers, the revenues, everything like this were all lower, and the price of the stock was also double. And this stock really doesn't have too much dilution either. So it's a pretty, I think we're at 20 something $billion today. I think Warren Buffett bought a little over $40 billion of a valuation. Where do you think that this can get? And do you think that it's a good price today for your portfolio?
Yeah, and management alignment is really strong with this company. So it's founder led. It's also like the founder actually gave up stock options, saying, "Look, I am not going to take money that I don't deserve," and basically renegotiated his compensation, where he had a fixed amount of compensation. He said, "No, we're not going to do this. It's going to be more performance based." So very similar to what Elon did with Tesla, where it's like, "Look, I don't want a lot of money up front from cash. I'd rather show the performance and make my money that way, so it justifies my salary." Right?
You should honestly look. Oh, sorry. I just wanted to also say that
No, go ahead.
you should try to look and find large investors whenever we're talking about Warren Buffett and these sorts of things, of people that didn't believe in this founding team. Every large money manager is also in this deal. I mean, every single one. But sorry, Chris, go ahead.
No, you're absolutely right. So I think there's a lot of intangible things that are going on with Nubank that may not be 100% reflected in just the numbers, but even the numbers are screaming like, hey, this is a buy. And then on top of it, if you look at the other intangibles, it's telling you that this is a buy. So the bear case for Nubank is, in my opinion, is there is somewhat of a bear argument that Latin America is a lot more risky than the US market is and some of the other stuff. But I think they're very well insulated from that because they do take their money, they put it on the side for loan loss provisions. Like they're not just like, we're going to take all the money that we make, put it towards more growth initiatives. No, they're saying, look, we do believe that we're ahead of the credit crunch, so that just in case if there are loan losses, we have provisions for that. And that's how banking should work, right? If you look at any bank when they're giving money out, there's no bank in the world that's saying, I'm going to get every single dollar that I give to this person back. They know that based on the risk, I am going to get X percentage of my money back. The more risky you are, the more they're going to charge you an interest, right? So that's where you need really good like CROs, like credit risk officers who like literally look at the balance sheet, make sure that the business is operating well, but it's not taking excessive risks. So an example is Silicon Valley Bank. Their CR. You guys know that they didn't have a goddamn CRO for 8 months, which is retarded. Like during one of the craziest monetary cycles, like it's getting me fucking pissed off to even like.
Why you didn't lose any money in them?
I know, but it goes to show that like. I'm not going to say anything, but a lot of it, in my opinion, was thanks to woke politics. But I'm not going to go too much into that. I already had my I already had my diatribe of that last couple of weeks ago. Some commenters were like, "You're saying that because Go will go broke, that company's not doing well or diversity can." No, the point is when you turn your entire business into like some sort of like culturally like weak inept company where you prioritize social
We're not going to go
rather than profit
goes into this.
Yeah.
All right, Tanner, we got 5 minutes with you. How much cash are you holding in your portfolio?
Like a percentage basis or a dollar amount?
Yeah, no. Well, if you want to give us the dollar amount, I would love to hear it.
A percentage basis, I don't know, 6%, something like that.
You want to give us the dollar amount? That's more exciting of an answer. I'll give you my dollar amount. I have 95,000 invested in the market. It doesn't look like 95,000 right now. Eventually it will. It'll hopefully be more than 95. But I think I'm 20% cash, something like that. I know Chris is.
What is it all just Palantir and SoFi or
no,
what's going on?
There's more than that. You know that. There's Tesla. There's some Ginkgo Bioworks in there. There's some S&P. There's some Google, but then I sold Google. But okay, so because you only have 4 minutes left and you have a hard stop, are you planning to go all in soon into the market? And is this like, because me and Chris were talking about this morning, is this a 2008 moment where you want to get really rich, or how do you think of this?
I don't think I don't think I time it like that. I can't time the market. Whenever I see a price that I think is undervalued and that potentially it's a screaming buy, then I buy it. And like I don't know. I don't think I'm that calculated in terms of my purchases. I buy great companies at under what I think that the valuation should be at.
Or it's purely based on pricing?
Oh yeah, I mean, I'll buy multiple times a week, I would say. Okay. I see things. I hold a larger portfolio than what I talk about. I want to stick in the fintech and financial stock game, but I buy all tech. Really, I love.
We didn't get a chance. All right, hold on. We have 3 minutes. Okay, Chris has a lot of Google. You don't.
Yeah. I'm not a believer. I'm not a believer. I think Chris should sell that before he loses more money.
Wow.
And no, so okay, here's the thing.
Chris, he said you're stupid for buying Google, bro. That's literally what he just said.
Here's the thing. They hold the biggest castle on the hill, and defending it is extremely hard, and they're in second place whenever it comes to defending it. And even if you have to, even if they make a better AI and a better search engine, I just realized, is this actually what we want to talk about? But I'm not on a fintech podcast anymore, so I guess we can. So
yeah,
yeah, it's very expensive to run these large language models, even if you run one that's trained in very small subsections, the idea of multiple paper clips versus one large paper clip. So it's cheaper to do it in certain ways, but it's still more expensive than how they're running it today. And
we use YouTube, Tanner, all of us, and that's part of Google.
Yeah. Oh, perfectly fine. That makes up a small portion of their revenue. And what people don't consider is that, 60+% of their revenue is, specifically in search. And out of all the fintech companies, they're the least diversified. They run
They're not
massive.
Fintech. They're not fintech. Just
sorry.
taking a step back. Sorry.
Yeah. I said fintech. Out of all the FANGs is what I meant to say. Out of all the FANGs, they're the least diversified. I think that search has been the most profitable business than any other business maybe ever in history. And it's going to get disrupted, and there will be many players in this space, and they're going to do it more efficiently to the point where you don't even need as many queries. So that's another thing too, is that I think that Google search could be better, and they choose not to, so then they can have multiple searches.
You're not wrong on that, Chris. I've been using ChatGPT all week, and it's been amazing.
Guys, have you not seen ChatGPT 4? You can take a picture of your fridge and then ask it what recipes you can make out of the ingredients in the fridge.
Pretty crazy.
Get off the idea that you're going to keep doing Google search. It's like one of those things, like the first investors of Amazon, and they go, okay, why aren't people doing this to buy their books? If you think people are walking back into an Indigo or another bookstore, you're done. It's moving on. We're going to AI for all search queries.
Okay, Tanner, do you have a hard stop at 11?
No, I want to hear Chris's rebuttal, and then I'll get going.
Okay, wait. So, okay, Chris is going to give you a rebuttal. Like, when do you have to actually go? Like 11:10, 11:15? Can you?
Yeah, like 11:05. Let's go.
No, 11:05 is not. All right, Chris, I'm going to do a rapid fire with Tanner, but before that, you give a 2-minute rebuttal. All right, 2 minutes, go.
Okay, so
I can also watch his rebuttal on the other,
That's what I was saying. When you leave, Chris can do the rebuttal. That's actually what I was going to say, because you don't have time to debate. Okay, so let's do a rapid fire. Then Chris, you'll have your full, because Chris, we can stay on longer, right? So like 11:30.
Yeah.
Okay.
Yeah.
All right. So Tanner, rapid fire. You got like 10 seconds for each of these. Thoughts on Palantir? Go.
I have Palantir. I'm a holder of Palantir. I'm a big believer. Yeah. What next?
Okay. Amazon. Do you like Amazon?
Not right now. Well, yeah, not right now. Not
Chris also
not
Amazon,
a super fan right now.
It's very interesting. Chris is like anti your portfolio. And then I think last one, thoughts on Coinbase.
They'll be the biggest player biggest public player in crypto. I think that your money in Coinbase is better than in crypto right now. I'd rather buy the stock than buy the coins.
Okay, well, CodeStrap happens to agree with you as well. He says that search is dead. Period. All right. That's it. Tanner, thank you for joining. 212 people stay with us. Chris will present his rebuttal. Tanner will listen while he goes to sleep and eventually respond probably on Twitter. All right, Tanner, thanks, you
guys.
Appreciate it.
And you know what? Here's the thing. Okay, wait, real quick, just as I leave, and I still have a couple minutes. I mean, those were not as many questions as I thought. Thoughts on Meta? Big fan. Okay, what's it called? Where were we? What was I just saying?
Do you have any last thoughts on Google?
Yeah, thoughts on Google. Okay. Another thing is, yeah, I don't know. I already said it, I guess. I'm just heated, and I wanted to talk on the actual point. I still have,
if you want to have a debate, you can stay on longer, but if you have to go at 11:05, I get you. You got to go.
Chris, do you not think that it's much easier for companies like Microsoft to pick away at Google's fortress? You know what I mean? The 300 million new users that are using ChatGPT, do you think that has no effect to Google's search engine? Or do you think that the pie will grow regardless?
All right, Tanner, before he answers, just be prepared to stay for another 10 minutes because Chris is going to
Okay, go ahead.
All right, Chris, go ahead.
So I think, number one, the pie is growing. All right. AI is a very new industry when it comes to certain things, and we're still discovering use cases for it. Google was actually the pioneer of a lot of the stuff that we're seeing, right? To say that they don't know how to capitalize on AI is woefully ignorant of the way that Google operates. Do I think that they had some bloat in their operating structure, yeah, and they're dealing with that by doing their layoffs. They're getting rid of workers that don't
No,
necessarily.
but Chris, I want to be very
yeah.
specific. That's not Tanner's argument. His argument is search is dead. That's his argument. Google has the
Well,
most market
Yeah,
share.
my
I'll get-
argument's not the fact that Google can't like. I think that they could be the best AI, but I think even if they are the best, that's going to hold less margins than what they're holding today. So you still should sell.
Well, how do you know that? How do you know that AI, like that other
Because
verticals are not going to form around Google and they'll be able to monetize that? The key is monetizing the verticals that you get into. It's not necessarily just creating a great product. It's also creating verticals around monetization. That's where Google has always been more successful than a lot of other companies. So I would say to you that we're seeing that there is a new industry developing. Google still has its foothold on the old industry that's being slowly disrupted, but at the same time, they actually have the ability to get into these newer verticals and profit from that. So I would say that.
Do you
Yeah, go
think
ahead.
you just said slowly disrupted? Do you think that the fastest growing software ever in history is slowly disrupting Google?
Good point.
No, I would say that search itself is still a growing pie that's slowly not as profitable as what it was before because there's less use. To think that search is completely done is completely false. Like, I don't think people are like, oh, you know what? I used to use Google every day and now I don't use Google at all. Like, no,
No, but
it means
Tanner's argument is that a slight
Yeah.
decrease hurts Google because they own basically 100% of it. That's the argument.
They're pricing for growth, or that's at least what I believe.
with a PE,
and-
what's their PE right now? That's pricing for growth. Can you tell me what that is?
But
Yeah.
I'll check, I'll check,
that
I'll
goes to prove my
Yeah.
point that look at the actual drawback on Google in the last little bit because people are worried about exactly what I'm pointing out. You know what I mean? The
Well,
market.
that's where
I forget the day that they released their Bard AI and the stock went down 8%. This is an unbelievable move for one of the largest companies in the world, and
I
people
think-
don't see that as a massive red flag.
So I think that in itself was definitely a big mistake, but that's not unusual for LLMs. LLMs are not to the point where they're fallacy free. There's still a
PE of
lot of
19.
fallacies. Yeah. So you got a PE of 19 with a company that's got almost $120 billion in cash right now with free cash flow growing like crazy with $100 billion a year, nearly $100 billion a year in share buybacks. Really? Come on, guys, just use logic. Math is on on Google's side at this point.
Tanner, this is
You
an
know.
interesting argument. Coach Up says GPT relies on humans for its baseline. We're moving to AI generated content, but it has to be human verified. Google could absolutely kill Microsoft via partnerships that wall the garden around human verified content because Microsoft wouldn't be able to keep up with creating that human verified content.
Yeah, I mean, like, who knows, right? I mean, there could be some sort of thing where I know a couple of companies were coming out and suing, or not suing, but going after OpenAI, saying that you can't use our content
Yeah.
in your LLMs.
Yeah.
So that could be a problem, and then Google could do some sort of thing where if it's on YouTube, part of the partnership or something along these lines is that no, we can use you in our systems. People would still check that box in the terms of services and these sorts of things.
The
But
one
I
thing
just-
I'm just gonna address real quick is Google is not diversified. Yes, a lot of their revenue comes from search, but they've got a lot of varying businesses out there that are
that
multi-baggers,
make
in
up
my opinion.
the tiniest portion of their revenue.
Right, but they're actually able to monetize and grow those. Like, here's an example. Like, today's rally was probably supported by an increase in YouTube TV prices, right? YouTube TV, I used to think like, oh, maybe like one or two people have. There's a lot of people have YouTube TV. There's a lot of people that have YouTube Premium. Do you guys have YouTube Premium?
Yes.
Here,
I
Amit.
do.
So there you go. Right there is a business that now doesn't rely nearly as much on advertising anymore. Now you have subscription-based
But the
fees
same
that are coming in. Yeah.
the same argument that you have a problem with, and I'm not saying Google won't survive. Google can be a thriving business, but if you think they're going to grow
So
through
yes,
acquisition
they're a
and these sorts of things, just buy Oracle or something.
So right there, they're a thriving business. You just said it yourself with a PE of
Yeah,
19.
but I'm not saying, but I'm saying they are not a great stock. There's a difference. I think that people are still expecting growth from Google, and I don't think it's coming. I think it's the same problem that you have with SoFi. You know, the majority of their business is under fire, except the difference is a small company can take those risks. Google cannot take those risks. You know what I mean? And it's so funny that you like that stock so much, because I find that that go woke, go broke thing kind of plays pretty heavily into Google as well. But
No. So Google, in my opinion, is definitely one of those companies that prescribes a lot to that ideology. But one good thing about Google is that they have executives and leadership in a position where the ultimate decisions are always going to be driven by shareholder returns and shareholder profitability. That's always the case. Everyone is go woke. Everyone is woke when things are really good, but the minute that things go sour, wokeness gets thrown out the window. Look at Zuckerberg and Meta, right? Doesn't matter right now with, oh yeah, you know what, we have initiatives around X, Y, and Z. Zuckerberg's like, no, we are going to get efficient, we're going to get lean, and we're going to make the decisions,
and we're going to get rid of NFTs.
Yeah, whatever you have to do to get to a point where you are in a better position. I think that's the key with a lot of the Silicon Valley giants. And that's the reason they are where they are right now. And to think that Google's days are the best of Google's days are behind it, that may be the case, where they're not growing as fast as they were in the past. But look at their valuation right now. They are a value
company. Says he literally sat through a PowerPoint that showed a model of the Google traffic for whatever company he's at going to zero, because with every AI answered search, the content creator that supplied the input to train the model how to answer that question dies. I mean, Tanner's got a point here about AI search kind of disrupting the entire.
I don't think Chris is saying that I don't have a point.
I agree. I agree with some of the points that Tanner is making. All I'm trying to say is, look at Warren Buffett. I'll give you go back to like Warren Buffett. Warren Buffett.
If you're taking this much of a risk, you better get a better valuation than pricing in this much growth.
That's what I'm trying to tell you. That they are generating a shit ton of cash. They have shit ton of cash in the bank right now that they're using to support the business itself. In terms of valuation, even if they flatlined on growth, just their share buybacks alone make it a value proposition. The other thing on top of it is that look at Warren Buffett with Oxy, right? Everyone's like, oh my God, everyone's going to go EV, which we all know in 10 years, everyone is going to be in an EV. So why is Warren Buffett buying Occidental Petroleum?
The dividend.
Guys, I got to get going, okay?
Yeah.
Love you guys. Chris, let's do a video soon. I reach out to you all the time. This guy ignores me, not the other way around. So
I don't ignore you, dude. I told you I work at night, man. So many people, like Gabe was giving me shit too. Like, oh, you ended our podcast, dude. Amit knows I'm working overnight right now, dealing with shit.
All Chris does is work, bro. He makes money, doubles his net worth overnight. This is what he does. That's what he does.
I know. I got to listen to more of his politics on social media companies. I guess he knows those.
All right, everyone, don't leave. Me and Chris will be here for like another 10 minutes. Tanner, we'll see you later. Thank you for being here, man.
Guys.
Bye.
Yeah, bye.
All right, now I get to do this. Boom.
Yeah.
There we go. All right, hold on. I want to do for the next, what do we got? The next, let's say 10, 15. I want to do questions from the audience. I think this is how we should end every thing, Chris. So questions from the audience. It'll be fun. Anything you want to ask, nothing's off limit. Net worth, all that stuff. We might answer, we might not, but it could be stock stuff and rapid fire, Chris. So like 30-second answers to this, so we can get a bunch of questions in there. USA to Telugu Magician Vlogs. I love that channel is here. He says Google and Microsoft compete for AI market next few years, but Nvidia keeps getting benefited by. Yeah. So Chris, 30-second answer. What were your thoughts on Nvidia rallying today after hours?
Nvidia seems a bit overvalued, but you never know with the industry that they're in. They're actually the market leader in GPUs. I would say look for companies that are going to benefit from AI growth that are like picks and shovels. So right now, AI is gold. Everyone is rushing towards the gold mine. The people that get rich are not the gold miners or the people who are around that industry, but the people who sell the picks and shovels. Nvidia is a picks and shovels play, but there are better picks and shovels play out there, in my opinion.
Okay. Thank you to DRK for this. Format is question. Put the question, the colon, and then put your comment, and we'll be able to see it. Okay. So again, we both got to give quick answers on these. Crypto. Thoughts on crypto? I think it's too volatile for me to hold it, so I can't hold it.
I'm not a crypto guy. I'm sorry. I think there's potential for the industry itself, but in terms of a single cryptocurrency being a market dominant force that sees infinite returns, I'm leery. I'm not sure.
I think this is a question for me. Chris, how would you answer this question?
Yeah, it's real. Why not?
It's real.
As long as you believe it, it's real.
It's real. You can believe in anything that you need to believe. All right. How much cash are you holding, Chris?
Not much cash right now. The only cash we have is my wife's 401k that we need to move from one account to another because she's got a new job. Other than that, I'm fully invested in my personal accounts.
Which
That's not to say that I wouldn't sell something that has really appreciated. Like Meta has appreciated like crazy for me, so I may end up selling them and taking some of the profit and sitting in a cash position that I can use to basically buy up things if things were to go south.
okay, but basically no cash. Pounder price prediction for 2023. I think we end this year $11. I think we end this year at 11.
I don't know about that. I think we are flat to maybe a little bit of growth, maybe 8 to 9. I don't think it goes beyond that. I mean,
If
I
we
think that
rally in June, if inflation gets to 3% by June, and we get profitable, we might both be underestimating just the market with Palantir. But yeah, I agree. 8 to 11ish, 8 to 9ish is probably it. I mean, Chris, what's the biggest deal in the market right now? I personally think it's Ginkgo Bioworks at $1.42. I actually think that's the biggest deal. I really do, at $1.40. What do you think, Chris?
I don't have a comment on that, honestly, because Meta was like that about 3.5, 4 months ago. I think a lot of things are very fairly priced. So I'm not sure. I like if there are opportunities where things are super undervalued, I'll definitely like scream at the top of my lungs like I did with Meta. But as of right now, I don't necessarily see that there's that many companies out there that are there. Yeah.
Okay. Thoughts on cybersecurity? Palo Alto Networks. I haven't done a deep dive on them, but I think they're doing like $6 billion in revenue. CrowdStrike, obviously amazing company. Any thoughts on those two?
Yeah, Palo Alto is great company, very well run. CrowdStrike, I see it everywhere. I see it utilized everywhere. My organization uses CrowdStrike, great product. I just have to do more of a deep dive into their financials and how they monetize. But the cybersecurity is a very underrated field. So I would say there's a lot of pockets of growth in that area.
Chris, do you ever look into Dutch Bros? I remember you mentioning.
Yeah. I have a very small position in Dutch Bros that I'm adding regularly. Sometimes I think a lot of people forget that some of the best shareholder returns come from companies that are exponentially growing their businesses. So an example is Chipotle Mexican Grill, Wingstop. If you look at their charts, they're just out of this world. If you have a product that everyone loves, these are high margin businesses that have the ability to grow really fast via franchising. They can do exceptionally well. So I don't have that much of Dutch Bros, but I really do like their product, and I see it over TikTok all day long. So it leaves me believe that people might end up.
You got a meta bull watching TikTok. You're fake. You think Hertz can capitalize on the car market madness?
I really don't know much about Hertz. I'll be honest. I'm not there.
Yeah, I mean, other than the Palantir partnership, I don't know anything about Hertz. Maybe. I mean, I knew they were going to go bankrupt at one point, but they survived. So let's see what they can do. Any predictions on real estate market?
Down or flat, but not really like investing in real estate right now. I don't think so. I think there's just if you look at the market with regards to affordability, it's literally at the top end of everything. So no, affordability is out of this world right now. Until something breaks, I wouldn't be in real estate.
Open Door stock, is it a value play now?
I don't know.
You were bearish against it for a while, and you were right. Now it's $1 something, right?
Yeah, so my bearish thesis came true, but at this point now they could pivot and they could change things around. I don't know. When things are overvalued and the business is not there, you can tell very easily that this is something that shouldn't be at this price. But once it gets low enough, there's very little left in terms of value gains, from shorting a company like Open Door right now. Even if they go bankrupt, like what, you get $1, the chances of them going to $10 is higher than them going to zero, because they're at such a low point. If there's something flips in their business that could happen, they could end up causing you way more pain than trying to trade a stock that's going to go further down. So no, I think there was a point where you could have made money shorting this company when it was in the 5, 6, but not now.
Okay. Will you buy Palantir in 2023?
My wife's a buyer of Palantir. She just has that shit on. She's DCAing. I told her not to. She's like, no, it's okay. Palantir.
But this morning on the stream, you said you're getting ready to buy. right?
There is a point where I am definitely going to be
Chris, what do you
adding
mean?
Palantir.
You literally do a fucking podcast called Palantir.
Because there's other opportunities out there right now that I don't want to miss out on.
You
Big
can't
deal. Get off
allocate
my back.
10 grand at a $7 to Palantir. Really? You can't like.
No, I'm making so much money on other things right now, bro. I ain't trying to fuck around and have my money sit on Palantir. All right, I'm making money. Let me make my money, boy. That's what I'm saying. All right.
All right. Would you open mouth kiss Alex Karp?
No.
That's well, you guys know my answer to that. What is one activity that makes you happy?
Sleeping with my
Really,
wife.
bro? Can we get a better answer than sleeping?
No, honestly, sleeping. You guys, it's very underappreciated how much sleep is awesome. Like for someone who does not like right now with this night shift, sleeping is rough right now. My wife just
For
got
those that
back
don't
from
know,
a
Chris is
trip.
working like 6 to 10 a.m. and then he sleeps.
Yeah, it's sleep is a very underrated thing. If you can sleep well at night, you're the happiest person ever, man. I love sleep. Like, yeah, sleep.
One activity that makes me happy is walking and thinking. I love going on walks and thinking. I can think for like 6 hours straight and walk. Now that doesn't mean I'm going to be productive, but it does mean I'm going to think a lot. And thinking actually helps clear my mind. I know it's such a basic answer, but I just love to take a walk and think. Thank you for the super chat, John McClain. $2. This is going to me and Chris's eventual beer fund when we go get drinks one day. Do you own any SCHD?
I don't know what that is.
I think it's a dividend ETF. It's like
I'd
the biggest dividend ETF. You don't own any? Okay, I don't own any either. DRK, good as guys, got to get a rest. I'll check you out tomorrow. Thank you, DRK, for being here. All right, let's do like 2 more.
If you want a good income fund, I'd look at some BDCs out there, like Oaktree Specialty. OCSL is a good company to put your money into right now. They're yielding about, I think, 11 or 12% return. And most of their portfolio is really high safety credit with most of it being lean, first lien debt. So they're getting a good amount of return for that. They're very well capitalized, very well run by Howard Marks. If you guys know who Howard Marks is, look it up. Yeah, he's all time one of my favorite investors. So I'd say look at OCSL. There are other ways that you can play the strategic income market, but OCSL is probably my favorite.
All right, last 2. How was your day?
I slept a lot because I worked last night. You know what? I'm going to give a shout out to some people right now, real quick. Shout out to anyone who's ever worked in the tech field, and they work at a high pressure tech field. And let me give you an example. You know, a lot of people are saying AI is going to come and replace all these jobs, X, Y, and Z. I can tell you when things break, AI is completely useless. Like the human mind is still one of the craziest. Like last night, I work on, I was working on something. 12 hospitals had their dictation systems go down. Power, like we use Nuance.
What is a dictation system? What does that mean?
So basically when a radiologist reads exams, right, they dictate that into a microphone and that translates to a physical report. And that physical report then gets transmitted into the patient's charts, right? So it's a very efficient system. But last night it broke. It's 12 hospitals. You have radiologists reading around the country, are now basically reading into a microphone and the reports are not crossing over into Epic. So the doctors are not getting their reports. You know, people could honestly suffer and die. Now, what was the issue? Well, guess what? I had to call in Nuance. They actually worked with me. I ended up having to log into some of our client servers and diagnosing a problem in the middle in like 2 a.m. in the morning while all this is happening. And then at the same time, you're getting calls from all these hospitals saying X, Y, and Z is happening. We're not getting our reports.
Is this your job? You solve these types of problems? That's
yeah. That's one of them. So last night, dealing with the high level of understanding of complexity that some of these people have, I was awed by. It was in awe of it.
Did you
were able to, yeah, within 2 hours, everything was working. We were good to go. But the level of we're like, everyone looks at IT like, oh, they're just a bunch of guys sitting in an office in a corner somewhere, they don't know what they're doing, blah, 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 or they're just here to replace my mouse when it stops working. And that's like the furthest thing from the truth. Everyone, I believe sometimes that IT is actually more important than the end users think that we are. And yeah, trust me, AI can't help you figure shit out in the middle of a fucking crisis. All right. So anyone that's thinking that AI is going to replace jobs, nah, bro. Maybe they'll replace some segments of it, but you're still going to need guys like me sitting in the background making sure that everything works okay. And then also the customer service people that I was working with, because it's not just me fixing things, but it's also people what is that thing called, that actually talk with the customers, develop all these tickets, put these tickets into a system that we can use to help diagnose the problem also. So it's not as simple as, oh yeah, we have a ticketing system with ServiceNow. Like a lot of people don't even know like what ServiceNow really do. ServiceNow is a great way to manage all your ticketing across a wide network of what is that thing called, of people, and then be able to give you information that you can use to make some important decisions and fix things. Now, one of the biggest things with Palantir, and that I'm sure that Coach Strap could eventually talk to us about, is that a lot of these things can be natively built in Palantir Foundry. So if we had Palantir Foundry, we wouldn't necessarily need to have ServiceNow as a ticketing service. We wouldn't need to have Salesforce as a CRM agent. We wouldn't need to have this as another software or this as another software. You could build everything in one. That's the value proposition of Palantir,
Yeah. Johnny, I know you're saying Enovix. I haven't looked deep into it. Chris, have you looked deep into this one yet or no?
Yeah. I have looked at it on a very surface level. I'm very intrigued by it. I think the technology is amazing for the capabilities that they're promising, which is I didn't realize how big of a problem thermal runaway really was until I saw some of these car crashes and these videos of Teslas burning in the middle of this, and not just Teslas now, a lot of other companies just burning up. So I definitely have to do more research on Enovix, to be honest with you, but I like where it is. I do have to see operationally how they're going to execute, but I like the CEO. The new CEO that they hired, Raj Talluri, guy has background in already taking products to market. So if they're able to do it and they're actually able to scale up with high volume capacity and make it a profitable proposition, I think there's definitely a case to be made for Enovix, but I have to do more research. I'll be honest. I'll tell you guys all the time, if I haven't done enough research, I'm not just going to talk out of my ass. I'll definitely do more research on it.
All right, last one. Bailing out banks, is this a form of stimulus? The Fed basically made $300 billion out of thin air. What do you think about that?
Yes and no. This is what the central bank's responsibility is, to protect the economy, right? If they're not going to protect the economy, the core function then why do we need you guys? That's all. So I don't think that it's going to have it's going to have the effect of a stimulus, but it's technically not a stimulus. All it's doing is just building back confidence in the banking system, to know that, people are not going to be able to just pull their money out of banks and then crash the banks, right? This is a clear way that you have to stop bank runs, and they need to do it. Like, this is one of those things that they could not have gotten away from doing this. So even Credit Suisse, like the Swiss National Bank, had to come in and stop this shit because they don't want
$54 billion.
Yeah, they had to do it. Like, this is the problem with the system right now, in that we've come to a point where these banks now can take infinite risks because they know that they're so vital to the economy. Right. And so they know that they're always going to get bailed out, basically, from their bad investment decisions. I can't say for sure if Silicon Valley Bank put this into their pricing model, into their risk models, but let's just say it's not a good thing, and it is a good thing at the same time. In the short term, you have to take your medicine, but I hope that we understand that we need to not just take the medicine, but figure out why we got sick in the first place. And I think that's always been our problem, that we tend to get really awakened, like, oh my God, like, I gained all this weight and I had a heart attack, so I'm going to stop eating. I'm going to stop eating shitty food. And then 6 months later, everyone's munching on shitty food again, so yeah.
All right. That's a great late night stock talks. I like that. At the last 15 minutes, we just answer a bunch of questions and we keep going from there. Tomorrow, we will not be doing this because we have SoFi Weekly. And we have Palantir Weekly.
Hey, Coach Strap, if you're still on, man, join us. Join us on Palantir Weekly. We could use
Coach
you
Strap
again.
and me were talking last night. He has some interesting stuff coming soon, so he'll be making his return very soon.
Okay, sounds good.
So we'll see that. All right, Palantir Weekly will be back. Matt, I know you're here. I'm already consuming your down, so I'll send you the link. So I'm not going to ask you if you're down. And yeah, we'll see you guys tomorrow. A lot of stuff to talk about. Has been we didn't get to do it last week, so we got a lot of stuff. Carp's doing a lot of stuff, interviews, all this stuff. Yeah, Code. I figured he couldn't do the pod, but he will be watching. And yeah, that's pretty much it. Thank you guys. Chris, enjoy the rest of the night. I know you got work, and we'll talk next time.
Yay. Later.
Bye,
Take
everybody.
care.
Good night.